Hey guys, Eddy Ortiz here. Just wanted to quickly give you guys an update. I just got back from the Tom Ferry Summit, and it was an incredible event. And one of the topics that we talked about was basically what does the economy currently look like for our country. And it's very interesting because this is one of those things that if you look at the headlines, if you're reading the news, you're going to see, it's just mayhem out there, right? Chaos. The stock market just dropped 800 points last week. And that obviously means that there's going to be a recession coming. If you're listening to it today, they're saying, the administration is now saying, well, maybe not. Maybe it's not a recession. Well, let's talk about the actual data, right? Because this is one of the things that does impact people. It does make them think that a recession means we're going to have a housing crisis, okay? For those of you who kind of really follow a lot of the economic stuff, who really follow kind of what's happening out there, you would know that we are right now, as we speak, we are in the longest economic recovery in American history, right? 2008 was a hard year. And I mean, the fact that it was compounded with the housing crisis, it was incredible. But let me explain something. A recession is 2 consecutive quarters of GDP slipping, okay? That's something that naturally happens because at the end of any economic recovery is basically a recession, right? It's basically a slowdown in the economy. And that is natural. Things can't continue to go up. It's just not sustainable. So as we start thinking about what's about to happen, let's actually look at what's happened in American history when it comes to recessions. I don't know if you knew this, but in the last 5 recessions, going back to 1980, we have had 5 recessions, and then out of those 5 recessions, only 2 of them, the houses did not appreciate, okay? So I hear this all the time being out there with my buyers. They say, oh, I'm just waiting for the next recession because I'm going to wait and buy houses cheap. No, that's not exactly how it works. If you look at what those 5 recessions show, it was only in the 1991 recession, our houses did not appreciate 1.9%. Okay, that's a pretty big deal, 1.9%. And if you're looking at what happened in 2008, obviously that was a really big impact, right? We're talking, it was like 19.7% that houses did not depreciated ultimately. So what does that mean for you, right? We're not likely to see another recession like in 2008. There was a lot of things that caused 2008, right? The fraudulent mortgage lending. There's a lot of things happening on the secondary market, things that we obviously had no control over, right? But we have put so many things in place since then that is not likely to actually be the reason that causes this recession. So you ask, what are some of the things that do cause that? Well, if you're actually looking at some of the top economists in the country, what they're saying, the top 3 triggers for the next recession are going to be, you're holding for this, a trade war policy, right? So that's a big deal. We're hearing that word a lot on the news right now, and we're being told, hey, it's not a big deal. It's no big deal. We're really looking into what does that mean, right? A trade war policy can cause a really big economic slowdown. The stock market correction, right? Stock market has been rising. And again, that goes up. It has to come down eventually, right? Eventually has to level out. So things cannot be sustainable when they continue to rise up. And of geopolitical crisis. So whatever those top 3 things are, it is not a housing crisis. If you actually look at the metrics that show, where does housing crisis fall within causing a next recession, it is actually number 9 on the list, guys. I don't know if you understand how big that is, right? So what does that mean for you who wants to buy a house, for you who wants to sell a house? Well, I'll tell you right now, our interest rates are an all-time low, right? So we're talking a 3.75%, interest loan. That means buyers can get more for their money. That's a pretty big deal. And sellers have a lot more buyers that potentially can buy their property. If you're in Southern Utah, which is our market, is obviously, you can see we are still in a seller's market. So that's a pretty big deal. So when you hear the words recession, when you're thinking people are saying, oh my gosh, my house is just going to drop value. No, hold on. Let's think about that, right? So right now, nationwide, we are appreciating at 4.1%. That is pretty big. That is what we're anticipating for 2019. And if you like to follow folks that really know this data, that really dig into it, you should look into KCM. I mean, they are amazing when it comes to this thing. They have thousands of different data sources that they use for this. So in terms of projected appreciation in the next 5 years, guys, we're looking at a 4.1 in 2008 appreciation, 2.8 in 2020, 2.5 in 2021, 3.0 in 2022, and 3.4 in 2023. So I'm not hearing any depreciation, right? These are the top economists in the country. These are the people who really know and understand our market. So when you're thinking about, oh my gosh, we're going into a recession, or I'm going to wait and so I can buy my house cheaper and all this other stuff, don't be fooled. That's just the fear mongering that's happening out there. People saying, oh, we're going to crash. It's going to be crazy. It's going to be insane. Listen, you make your own reality. And the reality is that right now, based on all the data sources that we have, it's just not likely that we're going to see another recession like we did in 2008. And again, just look at the last 5 recessions, okay? 2 of the 5, right? So now we're talking 3 of them. Actually, homes appreciated, right? Now, what we are seeing in southern Utah, and it actually has leveled out quite a bit in these last couple of months, right, is that we have seen basically a slowdown in our appreciation, right? So if you look at previous years, if you look at 2017, 2016, whatever, 2018, I mean, homes were appreciating quite significantly rapid, right? In certain areas, certain demographics, certain groups, right? In terms of price points and things like that. So we might have seen a 10, 12, 15% increase in home value year over year. Well, that is not necessarily a healthy market. A healthy market is actually something close to that 3.5 to 4% appreciation. So what started to happen is in 2019, folks started to price out homes at that 10, 12% increase. And I mean, as a real estate agent, you're looking at them and going, whoa, that house was never worth that. But you know what? It doesn't matter what we think, right? It's sellers might have thought that they want to have that ability to get the most for their money. And some agents did truly believe, hey, I think it's worth this 10, 12. If I'm looking at the trajectory for the last year, homes have been jumping this fast, this high, within this square footage, within this neighborhood. So if I put it right up here, just above, oh man, it's going to be great. You're going to sell your property. It's going to be awesome. But here's the thing. It doesn't matter what sellers want. It doesn't matter what realtors think it's worth. What really matters is what buyers think is worth. And at the end of the day, that's really where the money is, right? So although we were thinking we were going this way, our buyers were like, hey, hold on a minute. There's enough inventory for me to realize that I can just do this right here. I can purchase a similar type of square footage home. I can purchase a home with similar features. I can purchase a home in maybe the same neighborhood, and I can actually be okay just down here, but not up here. Okay. So what we started to see is from the beginning of the year, we started to see tons of price adjustments. I mean, we were looking at 30 to 40 a day, and 30 to 40 a day properties that were going up, and then 30 and 40 other properties that were actually going down in terms of prices. And people immediately think homes are depreciating. No, they're not depreciating, guys. They're actually they were never worth the price that it was originally placed at. So that price that you had it at, it was never worth that. Buyers are down here, you were up here. Now, what does that mean? It doesn't mean you can't sell it up here. It just means that you have a very limited pool of buyers that you're looking for that love your home, love the community, and are willing to pay the high price tag for it, no matter what the market says. Okay, and those folks are out there. I mean, don't get me wrong. You can put your house at whatever price point you want, and it could sell at whatever price point you want. But that doesn't mean that it will necessarily, sell quickly, or that it'll necessarily appraise. As part of my network, I obviously get notified on a lot of things that are happening in our markets. And I just learned of someone that listed their home at 1.1 million, and the appraisal came back 290,000 below what the actual contracted price is. I mean, 290,000, guys. So when asked what happened when we started questioning the agent, hey, how did this work out? Why was this such a large discrepancy? Well, the seller was not willing to sell their house at any less than that. So it doesn't matter what the seller wants. Even in a situation where a buyer says, I want your house at that 1.1 that you're saying it's worth, it doesn't matter. The appraiser came in, appraiser looked at everything that has actual comparables in the area, what has sold in that area, and guess what? They found out that that property is not worth that price at this point, okay? Now, if this was a cash buyer, they can do that. They can pay whatever they want. 1.1, I'll take it. That's mine, right? But no, these were finance deals, right? So this is a deal where a mortgage company has to be involved. And guess what? Mortgage companies are being a lot more cautious now, right? Because they got burned just like everybody else got burned in 2008. So going back to this, right? The home was never worth what the seller wanted it to be worth. And that agent should have never listed the home at the price that they listed it at. And that agent's buyer, or that buyer's agent, should have never offered that price from a lending situation if the comps did not support the home. You are better advising your buyers, you are better advising your sellers that this is just not the right price point for the home. And you can show them the data and say, look, you are limited to only cash buyers because you are so far above and beyond. But if you don't have a cash buyer, and in this case, for example, this finance situation, well, this individual could have still purchased the property, but they would have to come up with the $290,000 to meet that seller's demand. So guys, just to wrap up, just kind of, just as I know I've been talking kind of a lot about the market and kind of how it's doing and the recession and what, the economic slowdown and all that other stuff. Last week the market dropped 800 points. Today we're back up again, even above that. So it's rallying back up. The market fluctuates. It's kind of fluctuating no matter what. So what does that mean to you is stop paying so much attention to the fear mongering that is happening out there, right? Whatever side of the aisle you are in, understand we are going to have a recession. It is going to happen. And when it does, it doesn't mean a housing market crash, right? It doesn't mean that we're going to see the same things we saw in 2008. So what it means to you is just, be understanding of that. Know someone who understands this. Read as much as you can about what's really happening in the market. And if it is a time for you to sell, if it is a time for you to buy, if it is a time for you to invest, understand that when a recession or an economic slowdown happens, historically, people do tend to take their money away from the market, right? So if they're taking it away from the stock market, they typically want to invest it in something that is safe, right? And what is safest than a real estate transaction, buying a real estate property and things like that. And obviously we know that 2008 wasn't the best case scenario to use, but the last 5 recessions, right? 5 recessions going back to 1980, guys, that's the last 5 recessions. You have seen appreciation basically in 3 of them for home values. And the one that you did see in 1991 where it depreciated, it was only 1.9%, right? So that means it still continued to go up in previous years. And then that year, maybe just slightly down. And then in 2008, obviously, we saw a drastic reduction. It was, we're talking 19.7%. So understanding those things is going to make you a smarter buyer, a smarter seller, a smarter investor. I mean, smarter in the sense that you understand that, it is a recession. It is coming. It is likely to happen in 2020. That's what most anticipate. But when it comes, that's not going to put fear on me that my housing value is going to depreciate significantly, that I need to get rid of those properties or any of those type of things. If you have any needs, if you want to talk about it, if you want to go ahead and leave some comments and ask some questions, research as much as you can on your own and do what you need to do, but let me know how I can help. If you're interested in buying, selling, or investing, let me know how I can help. You can give me a call at 435-625-1725. But I appreciate you taking a look, and go ahead and just subscribe below. And if you want to see some updates and things like that, and be adding some stuff to try to keep us updated on what's happening in our market. Thanks, guys.